Looks like the SPY is in breakout, money magnets. It is in breakout mode. It broke out of that flag pattern that I mentioned in the last video. I spoke about the 592 level. They turned that level into a buy zone before pushing it even higher, clearing a previous pivot high that we had in May 19th around 595.5ish. We got a little close above. That is a breakout of the flag pattern, a breakout of the previous pivot high. Are we heading to higher highs? Well, technically we are with this higher close, but how much higher can we go now that we are in breakout mode? It was an incredible intraday price action in my opinion. It was awesome as heck. I had a plan in my Discord. I wrote here, SPY has been flagging and above 592 is breakout mode. Clearing 594 and 595.5 would definitely be bullish follow through. And then I wrote here, so far this morning, the 592 is holding as support and showing buying pressure. This is not good for the bears, but bulls need to show some strength. 594 still must clear to put 595.5 or higher in play. So above 592, Unco was overall bullish. And we look on the 15-minute chart. Holy moly donut shop. Right here, with the green arrows pointing, that is in the morning when SPY was still treating that 592 level as a support. That was not a good sign for the bears. And then what happened? We cleared the 594 level, which Uncle alerted in the Discord. 592 held as support and 594 cleared. Holy moly donut shop, did that work out beautifully. It even cleared the 595.5 level on the 15-minute chart, which Uncle also alerted in the Discord. 595.5 cleared, putting 597 in play. Level to level, look how it hit 597 before pulling back. This is why Uncle give you guys the level to level. We play it safe, we play it smart. The market makers hate us because they can't play us. They hate us because they can't play us. We are money magnets. Let's get to the daily chart. So bottom line is, guys, we are in breakout mode. 592 was the breakout level. They turned into support, and then we cleared a previous pivot high. 2 levels to watch. That's important. 595.5 is the first level to watch. It must hold as support. That was the previous pivot high. Remember, in uptrends, higher highs, higher lows. So if we take out a high, we want to see that higher high. So we want to see the previous pivot high hold as support, turn to support. Above 595.5, stay bullish with 597. And if that clears, 599, 600.3 and 603 would be both in play. The second level would be all the way down at 591. Now this level has been tested as a resistant level by the market makers, but now with the flag sloping down, it is the breakout level of that structure. So if 595.5 fails, 591 is the next level that bulls must hold. If bears take it down, SPY goes from breakout mode to false breakout mode. So if we drop below 595.5 and 591, we are bearish back on the SPY to the downside. This could have been a stop loss hunt or an attack on liquidity of the area of liquidity, which would be bearish. Below 595.5 and 591 is when Uncle would recommend to go bearish, to go puts. But above 595.5, if we stay above that level, more upside incoming. We're heading to new highs based on the trend we're currently in. 600 plus incoming if 595.5 can hold as support. Below 595.5, pullback mode down to 591, and below 591, bears reclaim control of momentum. Does that make sense, guys? Triple Q also looking bullish. 523 was my equilibrium level, and it held as support. And it looked like it closed just right around my 527 fib level. So for tomorrow, to be bullish, Triple Q must take out 2 levels, 527 and 530. If both those levels clear, actually 527, 528.7, and then 530. Those 3 levels must clear tomorrow. If they do, bullish, more upside incoming. Don't argue with the price action. But if we're below 527 and 525 and 523 failed, that's when I would be a little more bearish, at least down to 516 or lower. Below 516 would be extremely bearish, because that would be a breakdown of this multi-month trend line that I have, this red multi-month trend line that I have. But remember, 525 and 523 must fail for Triple Q to go in pullback mode. At least a 9 $8 to $9 move to the downside is possible. But if we're above 527 and we clear 528.5 and 530, more upside incoming, guys. Price action is the shepherd. Don't argue with it. Here is NVDA looking bullish. We had that inside candle setup the last time we spoke about this. You can see that the inside candle setup has ended bullishly. It ended bullishly. The next resistant level that I have right now is at 142. If 142 clears, 144, 145.6, that's the fib level, and then 147 would be in play. If you guys want to go short, then 139.3 must fail as support. That would invalidate the breakout of the inside candle setup and also break down my fib level. 139.3 must fail to send us back to the downside. Fill the gap around 137, then 135 or lower incoming. Here is Tesla. I gotta zoom in on Tesla a little bit. I have a fib level here. That fib level is right around 353. Now we broke down 353. This was back on May 30th. Today we back tested that fib level and found some selling pressure. So based on this little price action, the behavior here, I would not get bullish on Tesla unless 353 can clear. 353 clears, 355, 360 plus would be back in play in my opinion. But as of right now, it's looking like some selling pressure. It looks like it wants to head back down to the bottom of the megaphone pattern. We had NVDA, QQQ, and SPY looking bullish, but Tesla's looking bearish, and I'm a sheep, so I'm going to report it unbiasedly. And I tell you this, if support at 341 and 339.8 fails, that is bearish, and the bottom of the megaphone pattern is looking possible. That's a $10 to $20 move to the downside. Don't want to miss it. But if we are to bounce, 345, 347, 350, and 353 all must recapture, especially 353. And I would be confident that we would head back up to the top of the megaphone pattern. Here is Coin. Got a very beautiful bounce off that 246.7 fib level. Guys, this ticker symbol is very volatile. Trading Coin is amazing. It moves up, down, it moves. We have some days where it chops, but even its chop is better than some other ticker symbols trend days, I tell you. And it recaptured the 257.5 level. That is a false breakdown setup. That is technically bullish. But we have to look at this, look at the picture here. What does that look like to you guys? What does that picture look like to you guys? So I'm looking at the candle from May 14th. That level's around 264.8. 264.5 actually. Bulls need to clear that level because you guys can see that there is a potential head and shoulder pattern that could be forming here with this double bottom May 15th and around June 2nd. 264.5 must clear to make sure no head and shoulder plays out for Coin. If it clears 264.5, 263, 264.5, 260, 263, and 264.5. Those are my resistance levels for Coin. All those levels must clear to be bullish, especially 264.5 to send us back to the 270 or higher, to send us to a higher high, to avoid a head and shoulder pattern. I tell you this, if that resistance level holds and we break back below 257.5 and 256, in my opinion, that is bearish, and I recommend you going in puts. VIX looking bearish to me still. Like I said, 19 and 20.4 must clear. Unless both those levels clear on the daily chart, I can't get bullish on the VIX. Price action is still screaming bearish to me, keeping that 17 level in play and below 17, 15 or lower incoming. Guys, I love y'all so much. You are money magnets. You are a money magnet. Money flows to you easily and abundantly. And you see it everywhere, don't you? You see it everywhere. It can't help itself. Bye.